take some profit. Gold Zone's been on absolute fire over the last few weeks, months. Big part of that is Mr. Max Bryant. So put some fire in the chat for Mr. Max Bryant, please. It was Max actually at the last gold retreat that actually changed my fortunes. We had a chat, Max, if you remember. After the event, we were sitting down in the bar, and we had a chat after that retreat, and it's absolutely changed the way that I trade. It's changed my journey, which has meant that over the last few weeks since that retreat, I've managed to take my account and add 50% onto that account because I've been able to manage my risk properly. I've taken that advice, I've put it into practice, compounded it, and that's been mega, mega, mega. So thank you, Max, for that. Big thing for me is obviously we've got the new next retreat coming up. Mr. Elliot Ward's going to talk about that at the end, so I'm not going to spoil that for you. My next goal now, after taking the account to 50%, is now to double that. That's my next goal. I'm taking the advice from Max, taking the advice from all the training, and getting that on board. So listen to that advice. If you've just heard 1% of what I've said, you need to make sure that when Elliot comes in on the room at the end and tells you about this next retreat, that you get there, get in the room, listen to the advice, apply it, and the results will come. So before I introduce Max, I've told you a little bit about my journey. Few things for you to get ready with. Make sure your account's locked and loaded. And the big thing that changed for me that Max told me about was risk management. Okay, make sure you understand your risk management. Know what you're risking per trade. Even if you're a new trader, keep it nice and simple. Know exactly how much you're risking per trade. That's what's absolutely changed my fortunes moving forward, and why I've been able to take that account to where it is. My next step's double it. And if any of you know anything about compound interest, you'll know where that goes next. So fingers crossed for me. Massive appreciation to Max for all your guidance, and to everybody else who post trades in the chat and trade ideas and all the advice and support from the amazing group. Learn the skill. Don't just take the signals. It's a skill for life. Get on Elevate, learn to trade. You'll have a skill that will take you to great, great places in the future. So here we go. The value on these calls for Max is absolutely phenomenal. Can you even comprehend how much the information Max is about to give you is worth? It's worth 10 times the subscription on its own. So listen up, pay attention, listen to what Max has got to say. Max, you ready, brother? Yeah, here we go.
Absolutely, man.
Yes,
Alex,
right.
mate, I just want to say thank you so much, man. Obviously, the words appreciated. It takes a bit of skill, mind. You've got to kind of understand what you're doing in the markets for us to obviously compound. And what you're doing right now to be able to obviously gain 50% on your account, dude, after listening to what I've said and doing the risk management, that's amazing. So honestly, congrats to you, bro. What I will say, guys, is when I'm saying risk management, all it is, it's quite simple. Just take note on what the trade is setting out and don't risk more than 3% of trades. What a lot of people do aren't being consistent in this, and this is why things can go wrong. If you like, say for instance, 10 trades get sent out in a day, right? And you manage to get on only 5 of them, okay? The first 2 trades, if you go over leverage and you put more lot sizes on what your account's worth, and we have a loss, and we win the next 3 trades, let's say, and you have to only go on little lots, obviously that's not going to accumulate and it's not going to equal out, So you've got to understand risk management for you to be able to be successful in this market. So it's a major, major, major factor for us to obviously progress and see results. Things have got to be on lock and consistent no matter what we do in trading. So that is key. And this is why I stress so much about risk management. As you can see, Alex is as he said, he's after listening to what we said, he's managed to obviously start seeing profits roll in consistently, and with the losses, they equal out, so it's perfect. Risk management works, and this is why we do it. We want to be profitable. We don't want to be losing and blowing accounts. This is why it does it, and this is why it works. So well done, Al. Good stuff. Right, guys, really, I just want to dive straight into this because we have got some very good setouts showing ourselves. Which we're going to get to. So let me just screen share anyway. Give me a thumbs up if you can see the screen. Can we see? Yeah, cool. Nice one. Let's dive off. Got what I'm going to do, guys, because I need a full screen. So I'm actually going to get rid of the cameras in the chat box. So Els, if you can be on the messages, mate. If anything comes through, just let me know, buddy. All right?
Yeah, I got you, bro. Let's do it.
Cool. Nice one. Let's move out of the way. Cool. Right, let's get into it. What we are seeing right now, guys, we are on the weekly time frame on gold. Okay, so we are pushing up to all-time high areas. Major stuff. Right now, we are looking at $2,770 per an ounce of gold. So we are going up gradually. As I keep saying, gold will probably just keep going up over time, but we obviously can trade this, and it's quite easy to get either buys or sells, as I'll show out. Awesome little stuff, guys. So what we are looking at now, all-time high areas. Where do we think gold's going to be going? And obviously, how can we basically get into the best positions, really? That's obviously the key and what we want to be doing. So let's have a little look into the market. I'm going to jump onto the 4 hour time frame, because I like to do my markups on the 4 hour time frame. As a lot of you guys know, we can see general direction run through the markets here. What I would like to show you guys, I'm going to actually go quite advanced in this, so please do write some stuff down, because what the market isn't showing us is it's not showing us some easy things. So what we're going to have to do is get quite advanced and get quite technical at the moment. So do listen in, guys. This is going to be a bit of a roadshow. So again, harmonic patterns are all over the markets. They present themselves every day in all kind of time frames. Obviously, the higher time frames are a lot more important. This is what we look at for obviously the bigger movements, let's say. So what we're looking at is this area here. Okay, a big harmonic pattern presenting ourselves here. As I did mark out last week, we expected it to go around here, but it's actually extended off. Okay, so now this harmonic changes from a bat pattern into a crab. Okay, so crab is basically just an extra extended long leg, and it will look something like into the 1.6 areas. 1.16 is where we want to be heading off to. So somewhere around this area, if we obviously extend up, this is where we can start to look off at getting in some sell areas. Okay. What I would like to say with obviously these harmonics, they're not 100% correct. Obviously, we use them as guidance, just in case obviously the market it does get to our obviously price areas, what we're looking at, then we can obviously execute. So, well, what we are expecting really is a nice obviously extension up to our D area, okay, and then the rules are a nice 38% retracement. Okay, so obviously what we want to be doing is grabbing our Fibonacci out. We extend it from the lowest part of the channel, and if we did reach up to the point D, we can start seeing a 32% retracement back down into the channel. Okay, ideally what this will be doing is hitting some EMAs for confirmation for buys. This is just a long-term play. This is basically what I can see, well, hopefully foresee, and it will come into play, because this will be the ideal situation for us. So if this harmonic plays out, which I have a good feeling it will, we obviously can start getting in some sell areas, but beforehand, ideally, we want to be riding this up into the D area. So let's go on to my other chart. This is what I've got laid out at the moment. If we zoom back out, obviously we can see the pattern here. We obviously got A, B, D, C, and D up the top, but the channel is very important, what's riding us up to this area. Okay, so this area here, let's zoom actually right into this so we can see what's going on. So these are also harmonic movements. So we call this the ABCD patterns. Okay, meaning we actually don't have this on TradingView, so I've had to like kind of bodge this up a little bit, as you say. But ABDC, so we're starting from the bottom. So A movement, B movement, C movement, and D movement. Okay, so what these do, they respect each other in harmonic, in the Fibonacci way. Okay, so once that move is made, this wave, the retracement we want to be seeing back down is to the 38% retracement. Okay, so let's just give it a little measure. Bang, our retracement to get back on the buys would have been at 38%, because off this harmonic pattern move, okay, the ABDC pattern. This is the ideal thing to be seeing out, and this is why I believe it can take us further up towards C area, is because what you can get is a back-to-back ABDC pattern. So again, if we start rolling out and we've got our first A wave, B wave, and then C wave, ideally for us to get into the buys, we want to be seeing a nice 38% retracement, okay, off this wave. So again, 38% retracement is back down into this area. If we zoom into the 1 hour time frame, we can see what kind of areas we're going to be going for. Okay, and this is going to play out quite nicely, I think, because as we can see on the 1 hours, we like to respect the EMAs on gold quite a lot. So we came down, we wanted to break the EMAs, and we've supported. I believe that's the 100 EMAs. The 100 EMA wicked us off, and we could see that happening again because right now that would be in an ideal position for us to get our buys in. You know, down back at the golden pocket zone, or even at the 32% retracement. So we need to keep a very sharp eye around this area here for us to get some buys. I believe this movement will be quite quick. But again, it's all dependent on how really the market opens. What we are looking at currently is the moving average slightly starting to obviously turn around. We did get a closure. Let's actually zoom in so we can see that a bit better. We did get a closure on the 1 hour candlestick underneath the moving average. So that is a bearish indicator for us to start having a bit of a downward movement. So ideally, for us to get a nice entry on these buys, it's just being patient just to see how this market opens up, obviously tonight and tomorrow. And then if we come back down into this retracement areas, as in the golden pocket zones, I'm going to be looking at getting some buys and riding up into that harmonic pattern. Once that happens, we can obviously jump back onto this chart. Let's draw that actually from point B. It wants to be on there. Yep, there you go. So once this obviously comes back up into D, if we do obviously come into the D area, this sell-off, when we come down also, it's going to ping us, that 38% area is going to ping us off to this trend line. So it has respected this trend line quite a few times. You've got a touch, a touch, a touch, a touch, and then now we've broken the main trade, the main trend line. So ideally for us to come back down and get some area of support here, again on that 38% retracement for our buy legs up to point D. That's quite a big trade, guys. If we start obviously going into unknown territory, it can move very fast. Obviously, that is all-time high. Again, I would like this to happen because there's a lot of liquidity laying in the old all-time high. A lot of people got into sales and probably into their sales even, and they probably didn't take profit. You know, we've been wanting a big sell-off for quite a while. Ideally, obviously, what was meant to happen when Trump came in, he probably should have strengthened the US dollar. So technically, gold should have had a bit of a sell-off, but it didn't. We just gained strength, and this is probably why, because of this huge liquidity pool at the top. Okay, so with these liquidity pools, obviously we can start to call these double tops. So we've got our first obviously top here, and then the liquidity move will obviously grab all the liquidity and then start closing out. Okay, so this is why when we see double tops, we normally have our first point, and then the second point's normally a lot higher, you know, because what that is doing is sweeping the liquidity out, and then it would start running off. So that when you get a double top, this is basically why. That's pretty much what's happening, is that we've come up before, sellers have got in, or buyers, let's say, obviously, whichever way it's going. And then obviously they want to sweep out liquidity, so they pull that right to the top and then they'll slam it again. So ideally for us to see this with the harmonic, everything is going in favor for us to take this liquidity pool out. With us being above this trend line, major bullish, obviously pushing on to the all-time highs. I'd imagine the buyers are going to get hold of us, obviously later on in the week. Going through news-wise, I actually haven't had a look yet, so let's have a scan. Durable goods, I don't think that's too important. That is, that's quite important. Fed interest rate again. Well, they're bringing these out quite a lot. I remember we went for a stage of obviously not having these for about 2 years, so it was quite nice trading without the CPIs and the Fed interest rates, because as we all know, they're quite volatile. So depending on which way, what I will do, guys, is when is that actually out? Is that what day is that? Okay, it's Thursday. It's later on it's Wednesday, I think, the CPI. So later on in the week, what I will do is try and gain as much information for us as possible to see which way, obviously, that CPI is going. Because if it's good news for us, we obviously can start seeing our leg into the D area, and then obviously executing some sell-offs. But on obviously a long-term vision, a sell-offs really back down onto that trend line is possible for us to obviously gain some buys, because really gold is going to keep going up. Class with their ETF, you know, they're doing some mega numbers at the moment. So just seeing really how this market can open. But that is my trade plan for the week. I think it's pretty solid. What we can obviously do is go back into the past with some of this stuff. you know, and just double check basically what we're looking at, you know. What we can do as well for this entry, let's zoom in. I did see that I'm actually going to get rid of some of this stuff quick, so I'll make this a lot clearer. I know Alex likes these, but FVG gaps, you know, there's quite a nice one down here, which actually does result us. Let's get that back out actually. So our FVG gap is actually bang on with the golden pocket, the 61% retracement. So that would again be a very nice area for us to get some buys in for our leg. Let me just scan this out for you guys. So again, an FVG gap is an imbalance of price where it hasn't came back in and filled that area. So where the FVG gap obviously is between these candles here. We've got our first candle, our second candle, what legged up, created our third candle. And normally what would happen is that price would like to come back down into this gap and fill it for it to obviously continue up. So now there's an imbalance here. So price likes to get drawn into these areas to fill. And then obviously that's where we can be getting some executions in. If we look, if we can see that back in the past, where did that area go to? Okay, that just went literally to the top of an FVG gap there. Didn't actually close in it or touch it, but it was very, very close to it. So as you can see, they do like to come near these areas. Normally, ideally, when we'll be executing is in them areas. That didn't touch it, so we probably would have missed that. But with our retracement areas we've got here on the Fibonacci, I'm definitely thinking at least to the golden pocket zone. If we start seeing some sell-offs early midweek, you know, that's the ideal play. But depending on how this market opens, you don't know what they're like. Sometimes they like to sweep liquidity straight away and then continue quick. So just playing it careful again and wait till we get our price confirmation, guys. You know, don't just jump into a trade willy-nilly again. I know we're seeing this movement here. A lot of people might just jump into that sell, but we're not just basically going to get used as liquidity. Again, we like to have our areas set. We like to know where price is going and then we'll execute. You know, we play the safe run and we want to be getting onto the higher obviously reward trades and less risk trades. You know, that is the aim of the game. That is the professional way I see it. And I will always strive for the best entries for us, you know, guys. That is the gold zone for you. But yeah, that's a bit of a scan, really. What I'm going to be looking into is quite advanced, that guys. There's a lot of stuff going on. This channel here is very strong. Obviously, what we've got is our back-to-back ABDC patterns, which do play out quite a lot, and that will probably take us past the all-time high. But for us to get in these buys again, ideally want to see in a nice confirmation and a nice retrace into this golden pocket zone, maybe tested onto this EMA and then a nice ping up towards all-time highs, guys. And then obviously, hopefully, to get in a nice sell off the harmonic pattern. That is the play, what I see foreseeing. But yeah, it's pretty sturdy. I like to obviously play it safe, as you all know. So we just see how this market opens up, I think. But yeah, has anybody got any questions whatsoever?
So Max, are we saying that that top gap there? Are we seeing sells from there if we get the right
from here? Yes. Yeah. So ideally, if we open up, we are under the moving average, but as I'm saying, this could just slam straight away. A good indicator for sellers to obviously come on board. But you know how rocky it gets. There is support there. There's a lot of wicks down at this area, so it could open up and quickly wick up. Take the sellers out who have obviously been in. Maybe use this channel support, and then we obviously could get some sells in that area. I would like to see possibly a double top. Just take this liquidity pool out if we come in and use this as support, because that is the all-time high here. We could obviously just rocket straight back up to the all-time high and break it from there. You know, we don't actually have to retrace. It could obviously just be in a very bullish momentum. What we're not seeing, it is obviously very bullish at the moment, guys. Obviously, we've been wanting to get into some sales, and really gold's just been pushing. You know, so it's probably been pushing for these liquidity pools. Which are huge, as I'm saying, guys. These are big liquidity pool areas where a lot of money will be laying. You know, a lot of people would have jumped on these sales. Some big boys with some big balances, so that's how the game plays, this is how the market runs. They take liquidity first for them to obviously move the market. So yeah, that's what I'm going to be looking at, guys, is pretty much in the long run a liquidity push up to the top of here, forming a double top, and then obviously continuing basically a bit of a sell-off, and then continuing back up to where it's been going. If we go into the month, we zoom out, this is why I can probably see a double top happening. So this is the pattern I want to show you quick. So we've got our first initial push up, and then if we leg up, ideally, look where C is. Okay, that ideally to me will be a wick in our future. Okay, that will be a wick with this candlestick, and then we'll come back down. The reason why I say this, guys, is because if we look back in the past, we can see this happening all over the board. There is our first wick. Okay, we started selling off, liquidity grab above, obviously, the pool. Okay, that liquidity grab then sold off. They like to do this around the board. You will see this multiple times. Not so big, obviously, but these spikes would have been taking liquidity. Again, liquidity grab there. They happen all around the board, guys. So we obviously just got to be patient. All of these liquidity grabs, it's done it again. Done it on these ones down here. There again, liquidity grab. So on the monthlies, we could definitely expect this just to basically pop up into this pool area. And then that's ideally where we get these big sales. We can probably possibly grab a nice 1,000 pip and ride that back down for the long run. But yeah, guys, let me just zoom into this. I did actually get another harmonic pattern in there. Oh God, I've lost the chart now. Oh, where's the chart gone? There it is. Sorry, guys. Again, on the mouse pad, very hard to do. Let's just zoom out and go back down to that channel. As I'm saying, these harmonics do happen. And I did spot this earlier. Where is it? Oh my God, I've lost it. There it is. Okay, so just to show you guys what can happen, obviously, on these harmonics, this is a perfect example of what I did see. Obviously, this is the pattern here. This is called, I think this is, again, the extended bat version. Okay, so looking like a bat, obviously, with our triangles. The sell-off was immaculate. Okay, so we extended our full areas. We basically took liquidity out of area X. Okay, all the sellers came out, and then we continued to basically sell off into the golden pocket. Okay, nice area for buyers to get into after the harmonics finished. But the anticipation, a lot of people would have been selling on these highs, but they don't know, obviously, about these areas, what they want to be taking out. Liquidity grab. There almost is a trend line there as well, what I can spot. Pretty much bang onto the trend as well, if you guys can see that. Nice trend there on the 3-pin support, So that area was nice. We can obviously start to look at this again up here. If we draw that back out. Oh, let's delete that quite quick, guys. I just messed that up. Oh my God, it's so hard to do this on the mouse pad. I need my keyboards back. Won't be long, guys. Basically just in an apartment at the moment because I'll be moving into my main house in a week. So I'll be back on the computers and back on with the mega trades. But as I'm saying, the harmonics there, guys. And if we do extend that out and we grab our Fibonacci for the sell-off, we obviously could start seeing the sell-off into the 61% retracement. And where is that? That's on our huge trend line, what we've been running off for the last months. We've been on this trend line since March. And it's been very vital for the buyers to come involved. So again, if we do get in the sell-off there, that's a very big trade for us to run down and grab some very nice pips. But that is a very good play in my eyes. That's what I'm going to be looking at for the long term. But as I'm saying, short term, quick sell-off down onto our trend line. Let's go onto the other chart. Got that bar in the way. Let's go back onto here. So a quick sell-off onto this trend line down here, guys, and then get into the buys, really. I'd like to see some support onto this trend and then basically grab ourselves some couple of buys up to area D. Let's do a little measurement on pip-wise and what that could be, potentially. I think that was 500 pips up to the top there, guys. So yeah, it'd be around 500 pips up there, guys. So if we get into a nice buy area, we could obviously hold that through the week or weeks to come, So yeah, be a very nice trade, that. Be solid.
Okay, a couple questions from Alex. We've got Max.
Yep, let's go, Al.
You're right, Max. Yeah. So, you know that 1 hour fair value gap we just added?
Yes, buddy.
Is that a fair value gap above it on that massive bullish candle as well? That it's like it's already bouncing off really on that.
On here,
Yeah, on that 1 hour chart that we put right where the current price action is. We added
here.
it was on the 1 hour, mate, I think.
I was at 1 hour, but oh my God, sorry, I'm on 5 minutes there.
Yeah, that
Uh, do, 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 do.
so
Yeah,
we
so
added is good. I mean, that's it. I know it's a massive fair value, but is that still classed as a fair value gap? It's kind of bouncing.
ideally, when we look at fair value gaps, it's the first three candles. So the idea is that's the first candle, and then the fair value gap wants to sit into the second, and then the third obviously is the one we go off on the bottom wick.
So it's the first three candles of the move.
First three candles off the off a move really, and what we want to be seeing with a fair value gap. Oh God, I hate doing this with a bloody mouse pad, guys. Sorry, pressing all the wrong buttons. So what we want to be seeing is this. So this creates our fair value gap. Is this pin? Let's move out of the way. So we've got our first candle, which is the candle wick. We go off that area and onto our third candle wick, and then we basically measure the gap between the second. Okay, that is basically how we measure fair value gaps like that. So then the gap would be in between this bit. And obviously we want to be extending that across the chart to see where the wick will be coming in, you know. But yes, buddy,
No,
you're
because
quite, go on.
the one above is not the first three candles in the move. You wouldn't
Exactly,
necessarily. Right.
exactly
Okay.
that, buddy.
Right.
Exactly that, my man.
Okay. I
Exactly
didn't
that.
know.
And
Thank you.
yeah, yeah, that's the way they normally run anyway.
Yeah.
Because what that would be, that wouldn't where you'd go off that. So if you were doing that one, you would have to go off the top tier and go into that side of that bracket and run that down. But as I'm saying, it's normally the first three candles, which are one, two, three, which are the areas we obviously want to be looking at.
Right.
And
Understood.
also, I suppose with these kind of areas, when you're doing that, that matches perfect that FVG gap with our golden pocket zone. So I would say if that is an FVG gap, this would have a lot more priority over because of the 60, the golden pocket as well.
Yeah. Understood.
You've got to kind of prioritize more areas, what have more indications at, you know, where price is going to want to be drawn into more, you know.
And then last question, Max. I think
Oh, buddy.
everybody expected last week when Trump came in that kind of the dollar was going to pump, I guess, and then
Yes.
as a consequence, gold was going to fall, but it kind of did the opposite. Was that just
Oh, absolutely done.
is that just
Absolutely done the opposite.
uncertainty or?
I think it's more yeah, uncertainty. I believe that might have been. I think I've personally, I don't think retail were really trading as much. I think that was more institutions just basically just doing a bit of market manipulation. They obviously have this idea of where liquidity is, and they can just push it into them areas. But that was the ideal play. I was talking to a lot of other traders across the board who have been doing this for a long time, and our ideas were all the same. We all had this like idea that US dollar was going to obviously gain a lot more strength. Obviously, with Biden being in power for so long and him being such a sleepy person, you know, US dollar didn't do so great, you know. So the Trump effect was meant to come in, but didn't really do it with the US dollar. Instead, done it with crypto and gold and everything else,
Yeah.
you know. But yeah, we'll just have to see really what happens with this and see how Trump does have an effect. Obviously, US dollar will gain strength, but he has to obviously give out some big news. This is going to be big, the Fed interest rate, because now it's the first one where Trump's going to be involved. So I'd imagine there's going to be quite a lot of stuff happening really in between this area. Going to get quite volatile and there's going to be some big moves happening really, guys. I don't know if you guys saw the video. As soon as he came into his hot seat, he was just signing new laws and taking new laws away. Obviously, what Biden done, and he was just straight away having effect on the markets. You know, so the guy is a good businessman. Whether it be for the US dollar or whether it be for the stocks, this is the thing we need to obviously decide and differ from really. But yeah, man, good questions, Al.
Thanks, Max. Cheers, man.
We've got one more question with Peter. Peter's got a question there.
Hello, Peter.
Yeah, hey, Max. So, yeah, thanks for all this information. It's been great. I've been here a couple of, like 3 Sundays or so.
Awesome, buddy.
So learning and watching, but I just have a question during the week. Do you have is there something I'm missing? Is there a chat or something like that? How the trades are played out, or it's because I don't see that. I kind of understand trying to understand this information, getting it some of it in, but how to,
Yep.
implement it during the week.
Yeah, so Peter, what we're going to do is we're going to make sure that you get access to information through Max. Me and Wax, we're going to make sure that you guys get the information from our specific gold zone. So I'm going to make sure communicate with Jake and get the information to you as well. So as of tomorrow, you'll get whatever Max updates us with. I'll make sure you've got that as well.
Amazing, thank you, guys.
All right,
okay, that's it.
No problem, Peter. Cool, man. Tommy, are we all good? You normally got a couple of questions, my man. Are you okay?
Yeah, I'm okay. I wasn't very focused today, so I have no questions.
No worries. No worries.
Cool. Yeah. Next week I'm gonna be back with questions.
No worries. I saw you giggling away.